Also just getting earnings from Comcast, our parent company, beating the street with earnings of 71 cents a share. The company added 477,000 high-speed internet customers in the first quarter. This is interesting, though, because despite the partial effects of COVID-19, the company's actually still exceeding analyst expectations when it comes in for adjusted earnings per share, consolidated EBITDA, free cash flow, cable revenue, and high-speed internet adds. It's the cable part of the business that's particularly interesting. This is the best first quarter on record for customer relationships. They were up by 371,000. That's growth of up 24% from year over year. The video customers were down. They lost about 409,000 video customers, but that's not a surprise. The company has talked about how it is not going to chase those unprofitable subscribers, but really people need to be connected more than ever before, and you're seeing that kind of play out there. Running through NBC Universal, revenue there was down by 7%. That was primarily because of the closure of the theme parks and because of film revenue that was hurt. Remember, theaters everywhere have been closed. NBC Universal adjusted EBITDA was down 25% to $1.7 billion. Now, the broadcast television revenue, that was up by 8.8%. Cable networks revenue was consistent with the prior year. Adjusted EBITDA was down by just 1.2%. Film revenue, as I mentioned, that was under some pressure, obviously, down by 22.5% because of decreases in theatrical revenue as theaters everywhere were closed with some of these issues. For Sky, the total customer relationships there were down by 65,000. A lot of that was because of the postponement of sporting events. Sky revenue was down by 3.7%, and EBITDA for Sky was down by 15.3%. And guys, these are just a few of the metrics that you're running through. But obviously, Comcast was impacted pretty heavily, not just from the theme parks and the theater, but also the news that the Olympics are going to be postponed. And we'll hear more about that from the company, too.
There's a near-term future and a long-term future. And the near-term future, you know, NBC, the broadcast network signed some new deals and did things like that. But I would think that that business could get worse near term, you would think, because of sports and stuff. Mm-hmm. But then in the same year, you're going to have the Olympics, I think the Super Bowl, or there's soccer. There's all kinds of things that are going to be
back-to-back Olympics.
All back-to-back, exactly. So, but the theme parks, that's like when we talk about unemployment claims. You shut down the economy. Right. No one's working. So, you know, there's no one going to the theme park. So I don't see that. That's not a shock. Right. More people. What is it, Andrew? It's all business customers and broadband. I mean, that is a great business, whether it's video or not. You don't even need video. You just do that.
And it's a subscription business, so people are signing up.
And everybody's staying at home.
Upgrading.
Broadcasting from home, playing games from home, all that.
Right.
Okay. Don't forget they launched Peacock this month on Xfinity and Flex, too.
Right. Yeah. But the cord cutting is real, right? I mean, that 400 number, that's a pretty big number, isn't it, to lose that many? But
it is, but it's not surprising. They said they've been wanting to get rid of customers that aren't profitable subscribers. I mean, you can't subsidize that for forever. And they've also kind of recognized what's really happening is people want the internet connection. That's much more important as people change what they're doing and how they're viewing and those type of things. And that's the beauty of having the cable there.
Right, and the company notes that was the strategy, and because it's working on that, and it's allowing them to not fret so much about the losses in the video subscribers.
The stock's up by 1.6%.
Yeah.